Welcome to Beyond the Numbers. If you find these videos helpful, please like this video and subscribe to the channel. It really supports our team. And if you'd like a heads up when we share new updates, tap the notification bell so you don't miss what's next. We appreciate your support. With that, let's get started.
Well, hello again, Soul family. Greg Solis here with the update. First, on the family front, I wanted to again mention last weekend when we had Easter sunrise service at our club. It was absolutely extraordinary. It was amazing because I had all three kids that were actually in town. It was awesome. So the five of us went, and then of course we went and had brunch afterwards. So it was just a great celebration. I hope you had a great celebration as well. Now we're into the so-called festival season. We have 2 weekends of Coachella, and then we have Stagecoach. This is amazing festivals that happen here in the desert, literally about 2 miles from our house. So it's just a lot going on. We had Emily in town for wave one. So they had first Coachella. Then we had wave two, second Coachella, which Nicole came in town with 10 of her Hawaiian friends. Yes, you heard that correctly, 10 of her Hawaiian friends. So they had a blast. They went to the show. Everything was good. But boy, it's kind of crazy around here right now. So all is well with our family. I hope everything's going well with you and your family as well. Well, market-wise, the markets have recovered quite a bit, which is nice to see. And with everything going on in the war in Iran and just all the volatility and all the geopolitical concerns and everything going on, I wanted to pause and take a minute to talk a little bit about asset allocation and why it's so important. Since 1929, we've had 27 bear markets. 27 bear markets, that's a lot. Good news is we've had 27 recoveries. In addition to that, we've had about 60 corrections. Now, a bear market is considered a 20% drop, and we're talking about the S&P 500 here. We get a 20% drop in the S&P 500, that's considered a bear market. If we get a 10% drop in the S&P 500, that's considered a correction. We've had, again, close to 60 corrections since 1929. That means every year and a half to 2 years, you could expect a big pullback in the market. This is normal. It's the process. It's the journey. You heard me say this over and over again. The volatility is part of the deal. Of course, the important part that we do behind the scenes, depending upon the client's risk tolerance, rate of return objectives, and everything that they're trying to accomplish in their life, we, of course, create these asset allocations, construct a model that we believe is in their best interest based upon trying to reduce the risk and increase return to get the rate of return objective that we have. In doing that, is absolutely critically important that we create the asset allocation model using different investments or categories that are counter correlated during different market environments. In other words, we want to own some investments. While we might have some going down in value, we got others going up in value. In addition, we work in what we call non-traditional equity and non-traditional fixed income that sometimes has zero correlation to the stock and bond markets. So that when we get these pullbacks and these bear markets, hopefully we're holding up relatively well. The goal is to weather those storms well, to smooth out the ride over time. Again, there's a lot that goes on behind the scenes to try to accomplish this. We use outside research, we use LPL's research, we use very sophisticated technology to build these and construct these portfolios. And then there's the ongoing monitoring. We have an investment committee that meets here and that makes the decision based upon what that allocation should look like for that client, as well as which investment should we use within each asset class. So it's a very detailed analysis that takes place, but we firmly believe over time that'll help reduce the risk and level out the volatility during these geopolitical concerns, weather, war, politics. You hear me talk a lot about that, all the volatility. But we have a team here that works together to try to make sure that that allocation is built out correctly and then rebalance the portfolio on an ongoing basis to help sell high, buy low. We're gonna sell where we're overweighted, we're gonna buy where we're underweighted, and then we reallocate when we need to. So just wanted to give you a little behind the scenes there during this volatile time of what's going on with oil prices and inflation and all these things that we talk about. I know there's a lot of news and noise out there, but over the long haul, we've seen a lot of corrections, a lot of bear markets, and historically, they've always recovered. So hang on tight as we deal with the volatility and know there's a lot that goes on to help smooth out this ride for you and give you that rate of return that we hope we can accomplish. So if there's questions or updates or concerns, of course, don't hesitate to give us a buzz. Otherwise, we'll look forward to seeing y'all real soon. Take care. God bless.